Let me tell you something, folks. We're living through history, and it's happening right in your wallet. The year 2025 will be remembered for one gigantic story: the great fall of the US dollar. For 15 years, King Dollar was unstoppable, but that party's over. In just 6 months, the dollar plunged 11%, the biggest drop in over 50 years. This isn't a correction, it's a reckoning that's shaking every market on the planet. The dollar is the bedrock of the global financial system. When it sneezes, the world catches a cold, and right now, it's burning up. This isn't just for economists. It affects your coffee, your gas, your 401k. We saw a small bounce in July, but don't be fooled. The trend is down, and the forces behind it are relentless. For over a decade, a strong dollar meant Americans had incredible purchasing power. Vacations abroad were cheap, imports were bargains, and foreign investors flocked to US assets. But now, the fortress is crumbling. Confidence is being tested like never before. Investors see political uncertainty, mounting debt, and a shifting global order, a perfect storm for the dollar. Why now? It's not one thing, it's years of problems piling up. Think of it like a Jenga tower. Debt, trade wars, money printing. We've pulled one block too many. The whole structure is wobbling and everyone's holding their breath. In this video, we'll break it down: tariffs, the Fed, and the world's search for alternatives. This is the biggest financial story of our time. Get ready. The dollar's tumble is real and it's changing everything. We'll show you how. Stay tuned. Booyah! Let's get down to brass tacks. The match that lit this fire: trade policy from Washington. In April 2025, the administration slapped new tariffs on imports from almost everywhere. Not just China, but Canada and Mexico too. The market's reaction? Brutal. Over $5 trillion wiped from the S&P 500 in 3 days. Tariffs are supposed to help American industry. But in a global economy, they're attacks on everyone, especially US consumers and businesses. Suddenly car parts, lumber, and thousands of components cost more. Factories felt the pain. Foreign investors who own trillions in US assets started to get nervous. Is America still a safe bet? Many said no. The administration paused some tariffs for 90 days, but the damage was done. Confidence was shattered. The US looked unpredictable, even erratic. Markets hate that. When trust breaks, investors sell dollars and move their money elsewhere. That's a huge reason the dollar took a beating. For decades, the US was the anchor of the global economy. Now, abrupt policy shifts make us look unstable. The tariff tsunami of 2025 was a self-inflicted wound. It spooked allies, panicked investors, and made the world question if the dollar was still the safest port in a storm. That doubt is expensive. The world is watching and reacting. Trade policy isn't just politics, it's the foundation of global trust. When you shake that, you shake the dollar. And that's exactly what happened. The fallout is still spreading. The dollar's decline started here. Now let's talk about the Federal Reserve, the dollar's best friend for years. High interest rates made the US the world's top savings account, keeping the dollar strong. But now, uncertainty from tariffs and a slowing economy has flipped expectations. Wall Street is betting on rate cuts, not hikes. The fear of recession outweighs inflation worries. Even as inflation cooled, new tariffs threaten to push prices up again, putting the Fed in a bind. If they cut rates, the dollar loses its yield advantage. If they don't, the economy could stall. Morgan Stanley predicts the Fed will cut rates to 2.5% by late 2026, erasing the dollar's edge over the euro and yen. Money that once poured into the US will slow or reverse, putting more pressure on the dollar. Every Fed move is under a microscope. The market believes the Fed will blink and cut rates. That expectation alone weakens the dollar, even before the first cut. It's a high-stakes game and the dollar is caught in the crossfire. The outcome? More downward pressure. You can't talk about the dollar without talking about America's debt. Our national debt is now over 124% of GDP, a staggering number. In May 2025, Moody's downgraded the US government's credit rating. That's a huge symbolic blow. Washington's response? More spending, more debt. The One Big Beautiful Bill Act could add $3.3 trillion more by 2034. Our annual deficit is set to hit 6.9% of GDP. This isn't sustainable, and the world knows it. A country's currency reflects its fiscal health. Out-of-control debt scares investors. Foreign investors own over $30 trillion in US assets. When they get nervous, they demand higher rates or stop lending. A weakening dollar makes our debt less attractive, pushing rates up and adding to the debt spiral. Moody's downgrade and more borrowing have fueled dollar doubt. The world is questioning if the US has its financial house in order. In global finance, perception is reality. For decades, the US dollar was king, but in 2025, the rebellion got louder. De-dollarization. Countries, friends and rivals are reducing their dependence on the dollar, tired of US policy swings and instability. Central banks are buying gold at record pace, a vote of no confidence in the dollar's future. They're preparing for a world where the dollar isn't the only game in town. Big foreign investors are hedging, selling dollars in futures markets to protect themselves. This creates real selling pressure, a slow leak that's deflating the dollar. The euro is gaining strength, up 13% this year, and European stocks are soaring in dollar terms. China is pushing the yuan for trade. No single currency will replace the dollar overnight, but the world is moving toward a multipolar system. The dollar's monopoly is ending. It's becoming one of several major currencies, not the only one. This shift is a long-term challenge to the dollar's dominance. De-dollarization is accelerating, and it's a headwind the dollar can't ignore. The global financial order is changing. The dollar's role is shrinking. The world is diversifying. The era of dollar supremacy is fading. The consequences are just beginning. The dollar's decline is structural, not just cyclical. The world is moving on. Let's bring this home. What does a falling dollar mean for you? Imported goods cost more. Phones, wine, cars, everything on store shelves. Your dream trip abroad? More expensive. Your dollar buys less in Europe, Japan, anywhere. US purchasing power shrinks. International travel is no longer a bargain. On the flip side, America becomes a cheaper destination for foreign tourists. Good for tourism. But here's the silver lining. A weaker dollar boosts US exports. American products become cheaper for the world, helping manufacturers and farmers. More exports mean more jobs at home. The weak dollar penalizes foreign consumption, rewards domestic production. It's a double-edged sword. Bad for consumers, good for exporters. The economic deck is being reshuffled. Understanding this trade-off is key. The dollar's fall hits everyone from Wall Street to Main Street. The trillion-dollar question: where does the buck go from here? Most top analysts say the dollar's rough ride isn't over. Morgan Stanley forecasts another 10% drop by 2027. Why? Slowing US growth, expected Fed rate cuts, and a shrinking yield advantage. Some analysts argue the fears are overblown. If global economies slow faster, the dollar could rebound. Crisis abroad could send investors back to the dollar, as seen in its brief July rebound. But the prevailing winds are against it. Trade uncertainty, dovish Fed, rising debt, and de-dollarization. The long-term forecast? Downward. The era of the super strong dollar is over. Investors and citizens need to prepare for a weaker greenback. The dollar's muscle is fading. After all this, you might think the dollar's finished. Not so fast. Even weakened, the US dollar is still the world's financial king. Its dominance is deeply embedded. It'll take decades to dethrone. Central banks still hold 58% of global reserves in dollars. The euro is a distant second. The dollar is the language of global trade. 88% of all forex transactions involve it. Over half of international payments are in dollars. Most global debt is dollar-denominated. This creates constant demand for dollars worldwide. Even in crypto, dollar-linked stablecoins dominate. The dollar is the anchor of trust and stability, even in digital finance. So yes, the dollar is weaker, but it's still the sun of the global financial system. Its reign is challenged, but far from over. The world still runs on dollars. Don't count it out yet. The foundation is solid. Let's tie it all together. The US dollar has taken a serious hit in 2025. It's not one problem but a perfect storm: tariffs, Fed uncertainty, and a mountain of debt. Our fiscal mess and credit downgrade have fueled de-dollarization. For you, it means higher prices and costlier travel, but a boost for US exporters. Experts see the dollar falling further, possibly another 10% in the next 2 years. This is a major currency realignment, a wake-up call for America. But don't write the dollar's obituary yet. It still dominates global reserves, trade, and finance. There's no real replacement on the horizon. The dollar is weaker, but still the world's most important currency. Understanding this paradox is key to navigating the new financial landscape. Don't panic, but pay attention. Booyah!